This is all hands on deck. You know, housing is a component of our infrastructure build. It's not just housing. It's the hospitals, the 50 billion that we're putting in the hospitals. It's the 16 billion that we're putting into building more schools. It's the 70 billion that we're putting into build transit and another 30 billion for highways, all in our capital plan over the next 10 years. This is a province that, and a government that is going to not relent on building not just houses, but healthcare, building transit, building schools, building everything that we need to support growing communities.
Hi, Minister. You said, if not now, when, in terms of providing relief to Ontarians. Did you give any thought, or would it not have been more prudent to wait to the other side of the American election, given the anxiety I know the government's expressed about the possibility of increased or new tariffs and the pressure that could put on the Ontario economy?
We'll let democracy work next week. I always build in prudence into our forecasts, so we show different scenarios. But let me maybe clarify a little bit more when I talk about providing supports for people and for businesses. You know, we started very early on when prices of things started to go up. If you'll recall, back in the spring of 2022, we cut the gas tax. That was one of the first early measures that we provide. We've been cutting taxes and fees since we came into government, but we really leaned in when prices started to go up. We've increased the minimum wage. We've indexed payments for people on disability, low-income seniors to inflation. No other government's ever done that, so they're seeing increased payments. We're helping there. We've got, for those who don't drive, the one integrated fare, so that taking transit is cheaper in the GTA. We obviously took the license plate stickers off that help make life a little bit more affordable for the people who drive in this province. So we've done many things, but I think this is just another example of how we're putting more money back into people's pockets. We're cutting taxes, cutting fees, and making life a little bit better for people in Ontario.
You did mention the index to inflation for ODSP. I know that you know that advocates have been saying that's not nearly sufficient. If Ontario is in such a good place, why can the government not go beyond that kind of inflationary increase?
Well, let's say we have, and we will continue to do so. And let's go back a little bit. For example, for the disability program, we've increased funding by 17%, payments by 17%, which includes a one-time 5% increase. And it also includes, just this past July, a 4.5% increase. No other government before us ever indexed those payments to inflation. We're the first, so we're providing support in a meaningful way.
Hey, Minister, Liam Case with the Canadian Press. With all the good news you're sharing today, are you setting the table to balance the books this spring?
No, I'm setting the table for forecasting what we've got right in front of us, which is a almost $7 billion improvement over the planning horizon in terms of the fiscal plan. We continue to be on positive watch with credit rating agencies Moody's and S&P for upgrade. That helps lower our interest costs. And just yesterday, I believe it was yesterday, the Financial Accountability Officer, put out a report that validated what we've been saying, that we now have, for the first time in a decade, the lowest borrowing costs in Canada of any province, that we've got the first credit rating upgrade in almost 20 years in Ontario, that our fiscal credit ratings are improving, which allows us to reduce things like interest expense. I mean, we reduced interest expense by $1 billion last year over the previous year. That's $1 billion that we can use to invest in healthcare, pay down debt, provide support for people who need it. So I think, I just believe that you can, it's not either or, it's and. You can be fiscally responsible, provide relief for families, and continue to build Ontario.
But you've revised these projections next year down to a $1.5 billion deficit for next year. You also have $1.5 billion in reserve. So is it possible to balance the books in the spring?
Well, look, I'm an optimist. I'm always hoping that I can beat the numbers. But as you know, I think it was Harold Macmillan says, the toughest thing about government is events, dear boy, events. I'm putting forward the most credible plan based on the information that we have, putting that plan out to the people of Ontario. In fact, we've been doing this. This is my 8th fall economic statement and or budget. And every time we put out a statement, it's really a continuation of our plan. Think back to the election in 2022, we ran on my budget. In 2023, that was a continuation and an update of that plan, and this is just another document that supports our plan to rebuild the economy, strengthen our healthcare system, to tackle gridlock, to invest in critical infrastructure for our growing communities, provide relief for families through the gas tax cut, through the taxpayer rebate, all the while balancing the books.
Hi, Minister Jeff Gray, Globe and Mail. So you are not ruling out an early balanced budget in your next budget then? That's a possibility? I mean, it looks like it's already balanced really in effect if there's a $1.5 billion reserve.
Look, we're focused on the conditions to grow the economy, but there are external factors. There's geopolitical, there's where interest rates might go. There's other factors, the U.S. election that we talked about, and what trade impacts that might have. I built in a significant prudence, in each one of our budgets. I've made sure that we thought about the uncertainties, and that's what prudent planning is all about. Would I like to beat those numbers? Absolutely. I mean, what finance minister wouldn't want to beat their numbers? But I think this reflects, the statement today reflects a realistic forecast of how we see, based on the economic factors, our revenues, and our spending, a realistic outcome for next year.
But Minister, in every budget you have very conservative projections based on private sector economists. You beat them every time. Your revenues are always more than you expect. Aren't you just playing a little game here and hiding your balanced budget in time to have a big headline in March and go to the election early?
Did you say always lowering your revenues? I hope you didn't say that.
No, your revenue projections are always lower than the actual
your
revenues come in.
projections are
You always lowball the, wisely, we would say, conservatively, but you always lowball it so you overperform. Under promise and overperform, isn't
Jeff,
that
you're a very smart reporter. I wish that was the case, I'd hope to be able to balance sooner, but because of the high interest rates, the rapid Bank of Canada increase in rates, you saw that the impact on our economy, it slowed down our growth. So rather than balancing, I had a $9.8 billion deficit. So I try to do what I think is prudent and responsible, is put out the numbers that I forecast as the best that we have based on the information at the time. Do I hope we beat our numbers? Absolutely, but hope is not a strategy. This is our plan going forward.
Hey, good afternoon, Minister Colin DeMello from Global News. The LCBO seems poised to lose hundreds of millions of dollars over the next couple of years due to a variety of factors. Part of it was obviously the strike, but also the changes that your government has made in how alcohol is accessed in this province. Can you guarantee that as a result of those losses, no LCBO employee will lose their job and that no LCBO will close its doors?
Well, folks, there's your classic Colin DeMello. Can you guarantee? Do you have certainty? I'll tell you what I can guarantee is that I have a lot of confidence in the LCBO. And when you make changes to a market that's basically been in a monopoly structure for almost 100 years, when you inherit a very flawed monopoly agreement that the previous Liberal government made with the beer store, and you execute opening up the market, which I think is good for the LCBO. As you can see today, we showed that the revenues are up, the bottom line is up for taxpayers. This is good for convenience stores. They've told me this is a game changer, that they're selling products in their convenience stores. They're able to hire more people, so that's good for jobs. It's good for small businesses. And you know who else it's good for? And primarily, consumers. You folks all Ontarians have more convenience and choice. So I think this is a real positive evolution. We campaigned on this, and we're delivering on that promise.
Okay, so no guarantees about closures or layoffs. I wanted to ask about the $200 checks. Hey, $200 isn't enough. Why didn't you guys go higher? I mean, $3 billion for a province that earned about $6.9 billion extra in revenues. It seems like you could have done more. Why did you limit yourself at $200? Why didn't you go even higher and spend that $7 billion in additional revenue and give people maybe $400 a person?
We're giving a $200 check to 15 million people in this province, at a time when they really need this relief, in my judgment. At a time when, we've seen, because of the rapid increases in the Bank of Canada rates, which have caused, among other things, to slow down our economy, that because of many factors, our inflation hit levels that we hadn't seen in 30, 40 years. You know, all these things have, you know, put a lot of pressure on the hardworking people of Ontario. You know, I talked to someone the other day, she phoned me at 10 o'clock. You know, she's struggling with payments. She's got kids. You know, it's going to help her. I talked to someone that the gas tax cut, you know, they really, they say, boy, every time I fill up, you know, that gas tax cut is helping me. And I really think all the things that we've done are really important to tell people that we are there for you, we're trying to help you. And, you know, for a lot of people, $200 is going to go a long way.
Hi, Minister. So part of the reason why the deficit was for this fiscal year was much smaller than what was expected was because of increased tuition revenue from international students. So considering the federal government cuts in the international student visas for the next year, are you worried that this might impact the province's finances and increase the deficit again?
Well, we'll take a look at the numbers. Those are recent announced change. And as I said in the House, the mismanagement of the federal government on the immigration file. You know, I'm the product of immigrants. I acknowledged my dad's cousin who's coming over from Europe, Peter Bethlenfalvy. You know, this country, apart from Indigenous, came from somewhere else. So, you know, that immigration consensus is very important. Yes, that's going to have an impact. We'll analyze it, but, you know, we did factor that into our numbers in 2024, the budget. I set aside $1.3 billion to help colleges and universities. And, you know, we'll look at various scenarios, but like many things, we are going to navigate. I have confidence that we're going to navigate this province, you know, with probity as we continue to look at all scenarios that might impact the finances of Ontario.
Thank you. So you are also keeping the tuition freeze for post-secondary education institutions, and there was no additional investment since the $1.3 billion announced in the budget. So I guess the question is, like, why prioritize initiatives such as the cheques, the rebate cheques, instead of making more investments in the post-secondary education sector?
You know, it's not either or. I mean, we're making investments right across in post-secondary education, K to 12, you know, big increases in education funding, big increases in our healthcare budget. We announced helping families with the fertility tax credit and the fertility support program. We're helping you know, create more doctors in the province with medical care, medical university seats, increasing the number, making more spots open for Ontarians and Canadians. The Learn and Stay program to encourage more family doctors will pay their expenses if they stay in their communities for the next 5 years. You know, that's going to create literally millions more patients being rostered in Ontario. So we have a plan. Whenever you know, it's not one particular area that we're investing in, it's right across the piece. And, you know, colleges and universities are just another area that we continue to support.
Hi there, Alan Hale from Queen's Park today. So the FES document really points out the impact that the strike, the LCBO strike, and the subsequent collective agreement had on lost revenues from the LCBO over the next 2 years. How much of the $540 million that are going to be lost in revenues from the LCBO are you laying at the feet of LCBO workers and their union?
Well, we've updated. I'm not laying any of that on the feet of the workers. You know, we did a deal. We bargained in good faith. I think it was good for workers, good for Ontarians. And I think that, you know, it's also these costs are reflected in the numbers I put up for collective bargaining, other aspects of it. Obviously, consumption patterns have changed. But one thing I will tell you, I have confidence, not only the LCBO, but the workers at the LCBO. I think they've got great stores. They've got a great online experience. And we continue to be, you know, an operation that I think will continue to provide good returns for taxpayers. As you saw in the numbers that I put forward today, the share for the LCBO and the alcohol system will now expand because of the agreements that we signed. So I think this is really positive for not just the workers at the LCBO itself, but as I said, it's good for small business, the convenience stores. Tomorrow, we're going to be opening access to grocery stores in this great province, another step in our modernization plan. And ultimately, as I said before, the big winner is the consumer.
You've said before that the Building Ontario Fund will be announcing its first investment this year. Is it still on track to do that? And if so, what can you tell us about the project?
You know, certainly standing up that agency, we've got the new CEO who's starting in a couple of weeks. They're working on a pipeline of transactions, and I hope within the not-too-distant future we'll be able to announce some of those transactions.
Catherine DeClerica, the Trillium. You're banking on about $3 billion coming from the federal government's capital gains inclusion rates. What happens if that government changes before that is passed?
Well, you know, the advice that I've gotten is that these are material amounts that they've passed through various phases, and so there's the expectation that that will continue to go through. And so it's my job to say, what am I going to do with that? And that's why, in part, you know, because our taxes are up and our revenues are up, that we're going to give that back to the hardworking taxpayers of this province.
Okay, and why is the government going through the trouble of creating an alternate process for families who don't qualify for the Canada Child Benefit to get a $200 rebate check if that's only going to apply to the wealthiest of families?
It's comply to everybody who, it's the cleanest way to do it. It's comply to a lot of people, and we want to make sure, whether you're a tax filer or that there's, you know, that you have the opportunity to legitimately qualify for the $200 check.
This will be the last reporter question.
Hello, Minister. Brian Lilly, Toronto Sun. A few of my colleagues have tried to get you to say that your deficit, that you'll really come to balance by the next budget. I'll be much more blunt and say I just don't believe you. I think that you're going to, and I'll ask you to comment on this. Even after spending $3 billion in Dougie dollars, you could only get the deficit this year down to $6.6 billion. That includes using a $4.3 billion drop in what's loosely labeled other government revenue, your $1.7 billion contingency fund, and a drop of $700 million from government enterprises like the LCBO and OLG. So that before your revenue projections are shown to be low, you're already above the $6.6 billion. So convince me that you aren't already headed towards a balanced budget by the end of the year when you table your spring budget.
I can't give you any insurance because I don't know what the future is going to hold, Brian. I think what I do, and I've done forthrightly, to push back on your comments that you don't believe me, forthrightly that I put together budgets and documents based on the best information I have. Like any government, we always put in some prudence because we don't know exactly what will happen in the future. You don't know what's around the corner, but that's how you responsibly budget, whether you're in the private sector or the public sector. So I'm going to do my best, of course, always to beat those numbers. And along with my colleagues, you know, we're very focused on, you know, growing the economy, growing the pie, being competitive. We're not an island here in Ontario. We compete globally for capital. We compete for jobs. We compete for talent. And the best thing that we can do is put in the conditions for economic growth. You've heard the Premier speak about that over and over again. My caucus colleagues and the Premier and all of us really are working day in, day out to make that a reality. And if that allows us to beat our numbers, well, that's great.
I don't say that I don't believe you disparagingly. It reads like an old style Paul Martin, Jean Chrétien style budget or economic statement, under promise, over perform, as Jeff Gray said. On the issue of immigration, beyond foreign students, you know, we're going to see some kind of drop in immigration. And while your document does acknowledge that inflation and the higher tax revenue from personal tax, sales tax, all of that has contributed to this windfall that you've got, part of that is also driven by population growth. If we see a slowdown in population growth, what does that do to the province's finances?
You know, we're still analyzing that, but let me tell you, we're going from a very high number to still a very high number. Let me say a couple other things. It's been a while since I've been compared to Paul Martin or Jean Chrétien, so and that's an interesting comparison. I will also say, you know, so it'll take time not only for the numbers to roll through the system, but also to analyze, you know, how that impacts Ontario, because a lot of people want to come to Ontario, so we'll have to see that. And don't forget, population growth, you know, does have a claim on services and costs in our province. We want to encourage immigration. We want to encourage people to come to Ontario. And what I will continue to do, apart from analyzing the impacts of that, is we're not going to relent on making sure that we've got the homes, that we've got the infrastructure, the subways, the transit, the schools, the healthcare, the highways, because, you know, when you stop building like the previous government, you know, really built very little and taxed a lot, you know, you've got to, we're playing catch up, but we're not going to stop, so that we can continue to bring, to be a beacon of hope and stability and freedom for people right around the world, because they want to come to Ontario, they want to come to Canada, and I want to be the finance minister who welcomes them to this great province. So thank you very much, everyone.